Hey Chris, so I think we need to do a bit of structure talk again. I've been quite busy the last couple of days and I haven't really traded because I was outside a lot. So today the first video for you. Let's go to the monthly. So on the monthly we can see that we touched into this sell to buy area, like we started selling here. And then we broke structure there, and from there we had this. So we broke structure here, we broke structure here, and we couldn't break above that or above that. Okay, so we then started to come down here in this area. We wouldn't know what was happening. We were still thinking that this area, our demand area, would print a new high. Oops, wrong tool. Would print a new high here. So we could start the upwards movement, but then we started to sell, to have this bearish momentum, and now we came into this monthly sell to buy area. And if we take our fib, we can see that we came into the 71%. So this is a good discount zone to be looking for buys, but on the weekly we don't see any change in character yet. We would have to break above here on the weekly to then, let's say the weekly does this, then we have to look into these areas, weekly areas, to say, okay, now we break again the new high. This is just the outlook on the weekly. So since this failed to print the new high, we knew, okay, now we're coming down. On the weekly, this is our complex pullback, okay? Of this push to the upside, this is our complex pullback. So here's our weak. This low is weak. Because this push should have printed the new high to be strong. So that this gets broken is most likely then this to be broken, because we are in a bearish market, okay, on a higher time frame. If we look this far behind, so we printed the new low here. We came below this, printed a new low. This push couldn't run higher. Then we had the complex pullback of this up move. We corrected, but we never broke above. So this is weak. Yeah. And this is our swing high of this move, of course. So let's go to the weekly. Oh, this was the monthly, sorry, now we're on the weekly. So on the weekly, we can see that we came into this selling area before we started buying. So we sold, then we bought, and we took out this liquidity we had below here, okay? So we took out the liquidity, and then we started pushing up with a heavy weekly bullish engulfing candle, and we also left this liquidity, this double top. We have liquidity in here. So we might see, once we come in here, this is our weekly demand zone. If you want to trade from the weekly, of course, you could say, I'm going to buy this and target this, okay? But this is a pretty big stop for a small account because you have 238 pips stop. So this would be without any refinement of the zone. It's possible to trade it because you have the confirmation, you got the bullish closure, the who is there? You got the bullish closure and you also have the engulfing here. We took all this liquidity here and now it seems like we're going to take out all of this liquidity, okay? So on the weekly, we haven't broken structure because structure on the weekly, we can see these are our structural points, okay? We did not break above here. So we are technically still selling. We just have the first sign of bullish momentum with this heavy candle. So on the daily, so let's use yellow for the daily. On the daily, I mark out my structure now too, okay? So for me, this let's do it different. This is not a high because we didn't break above, so this is the high. So on the daily, we are still bearish as well, as you can see. You can consider this a structural point because you got like 75 pips. But me, in my case, I would consider this whole move. This is also my daily leg here. This. Okay. I wouldn't consider this a structural point. But it's not wrong to do so. You have to see how you see the market and how the price reacts to it. You also you have to write your own history of price of what you see because everybody sees it a bit different. Okay. So on the daily, we can see we are breaking structure. So there's no here also. So we are still bearish on the daily. So now we go on the 4 hour. On the 4 hour, it's a bit different. Now we only take this part, okay? On the 4 hour, we can see, let's use black for the 4 hour. So on the 4 hour, we can see that we have these structural points. Okay, we broke here. And you can see I wouldn't consider this. There's only this buy candle. So this is my structural point. So if you look at the structure here, you can see that H4 switched to bearish too bullish, sorry. So we are breaking structure on the H4. So I would advise you to write down, because you will forget it. Okay, always write it down in the beginning. You will forget it when you're on the lower time frame. So use this anchor text so it will stay there no matter what you do. Okay. So, okay. Now so we haven't changed any structure yet on the 4-hour. 4-hour is still bearish, bullish. And now you can refine this. I think this was the monthly. This monthly demand zone to your 4-hour demand zone. So this is your 4-hour zone. I would also consider the wick. And this is where selling started. So you can mark your sell to buy area as well, because price might reverse. Sometimes we reverse from this area where we started selling, or vice versa. So this is a zone I would be looking to buy from. And then do we see any 4-hour demand zones? I mean, here we had the change of character on the 4-hour. You can mark that as well. And on the lower time frame, I will show you what's going on there. So we had the change of character. We had the boss. Here was the boss, because we had the body closure here. This is a change of character because we did not break below with a body closure. That's why it's called a change of character, okay? Because if this move would have made a new low, like let's say we do this, then we make a new low with a nice body closure, and then this, then we had a boss here already. So yeah, and the next area I would be looking at would be this, the sell to buy area for buys. But other than that, I wouldn't be looking for buys because there's too much liquidity in here. In this area, there's ton of liquidity, okay? So on the 4-hour, we can also see that, of course, we are printing liquidity to the downside and to the upside. Like if you want to use this trend line. So we are in this channel and in this channel. Now it's just a matter of what will price do, what is price telling us. Because it can either break out to the upside or to the downside. We know that we filled some of this gap. This looked like that before the gap. We came into here, then we filled it up a bit more. So the gap was from here to here in the past, and then we keep filling it up now with very slow momentum to the downside, okay? So you can see there's not a lot of selling pressure. We came into this we came into this supply zone here, and we took out this liquidity here. You can see all this liquidity we ran. So we ran this liquidity, and now we are printing, we are coming higher, and we are pushing away from here. You can see these wicks here. This was the first time we pushed away here because of the supply zone. But now on the 4 hour, the direction is not really clear. So now, if you want, you can also look at the 1 hour. The 1 hour, what does it tell us? So on the 1 hour, we can see that we have a left shoulder here, we have the head here, and the right shoulder here. We retouched the right shoulder or our supply zone. Okay, this was our refined supply zone here. We came into this wick. Also can use the wick. This would be my refined entry. And then you could have taken the entry from here to here with a 7 pip stop loss, and then this would be on the on this area. This is the refined demand area. You would have had on the 50% your target, and then you would have had your almost 9-to-1 trade. Okay, but that move already happened. I was in this one. Yeah, let me see my entry. I have to check. So 14. I can't see it anymore because my stop was in profit already. That's why. But yeah, somewhere around here. I think I had it. It was like 8 pips, like this. Yeah, I can't see anymore because on the MetaTrader my stop I put in profit, so I don't see the original stop loss. But yeah, so this head and shoulder, like it's also a chalk on the 1 hour. You can see we took liquidity to the upside, then on the downside we already had this chalk was already also a break of structure on the 1 hour. You can see the structure on the 1 hour is we had this push up, push down, push up, and then the break came. Okay, on the 1 hour we had a break, so the 1 hour changed to bearish. And then this would have been your entry. Easy peasy lemon squeezy, if you would have recognized it. So then again, 1 hour we took liquidity and we broke structure. This push did not make a new high, so this was weak. This was a weak low. And this started to become a weak high because when we were here, this didn't go, this here should break below here to become strong, but it didn't. But now this push low, so now this here is strong, okay? This structural point is strong, we should not break above. if we break above, yeah, the whole situation changes. So this is weak. This looks like inducement. To come into this area. I mean, this looks good because we took liquidity. If we refine this area to our wick, this is the strong area. So we could say, okay, we might run this. Put our stop loss here. I mean, you can see on the 1 hour how tight your stops can become. You don't have to be on the 5 minute if you struggle with structure on the 5 minute or 1 minute. I mean, these are decent trades.